If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. Electric vehicle manufacturer NIO has been making waves in the EV industry with its cutting-edge technology and its sleek design. But despite its popularity, NIO's financial performance has been leaving investors wondering if it will actually be able to turn a profit consistently by 2024. In this video, we'll dig deep into NIO's financial status and explore the gritty aspects affecting its future profitability. We'll talk about all the risk and the challenges and the opportunities ahead. And we'll do it all with unflinching objectivity, cutting through the hype and the buzz to give you the real deal on what's going on with NIO. So buckle up and join us on this raw and intriguing journey to discover, will NIO actually turn a profit in 2024? Ticker symbol NIO is the publicly traded equity of the Chinese electric vehicle manufacturer NIO. NIO was founded in 2014 by Li Hongqin and of course the CEO and chairman William Li. The company actually began under the name Next EV. NIO sounds much better, right? But it wasn't until 2017 where the company was actually rebranded as NIO. Now, NIO began trading on the New York Stock Exchange in 2018, and since then it's become a hot topic globally, not just amongst US investors. As with any company traded on the New York Stock Exchange, the company's share price is really dictated by obviously the company's financials, the optics around the company, and industry trends are overarching. In recent years, NIO's stock price has been a bit of a roller coaster. In 2020, the stock had soared 1,000% from its March lows, reaching all-time highs at a certain point in November. However, the stock price has been fluctuating due to various factors, various market factors, supply chain disruptions, chip shortages, and industry-wide issues. Despite the stock's volatility, many investors such as myself remain optimistic about NIO's future. The company has a strong foothold in the world's biggest EV market, which is China, and they have lots of plans to expand globally. The company started off ambitious and it's doing exactly what it said that it would do so far, at a high level, of course. But whether the company will become profitable in the fourth quarter in 2023 or not, like they said they would, and just turning a gross profit for one quarter, obviously not for the whole year, is going to depend on its current financial status and the improvements in the pipeline. So behold, as we dig deeper into the economics. The company has surely been reporting losses over losses in recent years, but there are many reasons why the game might not be over yet, and it actually could just be getting started. For instance, in 2020, NIO saw a significant increase in cumulative vehicle deliveries, with over 43,000 vehicles being delivered in the year. This is a notable increase from the 20,000 vehicles that they started with in 2019. This increase in deliveries resulted in a significant increase in revenue for the year as well, with revenue increasing 111% in the fourth quarter of 2020 compared to the fourth quarter of 2019. Additionally, the company's been working very hard to reduce its production costs, which has been a significant contributor to the losses that we're seeing. In the third quarter of 2020, its gross margin reached 12.9%, up from negative 6.8% the year prior. This indicates that NIO is moving in the right direction when it comes to decreasing their losses and increasing their profitability. Furthermore, the EV giant has a strong cash position with $6.6 billion in capital, in cash and cash equivalents as of the fourth quarter of 2022. Now, they do plan to spend a lot of money this year, but I don't anticipate them running out. The CEO is very good at raising capital, which is important for a company like this. However, the optics around the burn rate compared to the cash that they have is not necessarily good for the stock. But what people aren't seeing is that with NIO burning all this money, what they're really doing is investing in growth opportunities, investing in research opportunities, and really expanding their infrastructure footprint. Above all, NIO's Q4 earnings were not so great and the market wasn't really happy with it, but it still does show growth in some areas. 62.2% increase in revenue compared to the same time in 2021. The company delivered 122,486 vehicles, last year, which was an increase of 34% year over year. And that's not it. In January 2023, NIO delivered 8,506 vehicles, including 2,190 SUV and 6,316 sedan. The company also announced that as of January, their cumulative deliveries had reached over 298K. And even during the Chinese New Year season, which is typically a slow season, NIO had serviced over 1 million power swap, which includes 300,000 swap stations that they have along the highway. The recent results, whether people want to believe it or not, do showcase NIO's potential for future profitability. The company expanding its product lineup and its infrastructure is creating a competitive moat that could possibly propel them to a better financial state. And being able to put all this cash into infrastructure and R&D gives the company a lot of flexibility, allowing them to be agile. On the one hand, the company's ability to maintain its sales growth momentum is pretty impressive, but the recent financial results do pose the question of, is NIO able to maintain this growth? Another intriguing factor is NIO's battery swapping network. This is certainly a unique feature that sets NIO apart from the competitor. It allows EV owners to replace a depleted battery in just a matter of minutes. This eliminates the need for long charging times and makes long distance travel less time consuming and more convenient. However, the competition in the Chinese market is fierce and cutthroat. Rivals like XPeng and Li Auto are hot on NIO's heels as they're all newcomer. They're also expanding their production capacity, and they're also gobbling up market share. But what remains to be seen is, will there be consolidation in the future? All of these players will not survive, in my opinion. So the question here is, can NIO continue to innovate and stay ahead of the competition? But here's one thing that no one can deny. Despite the competition, NIO's been able to maintain a loyal and growing fan base who value the company's unique features, whether that's its cutting-edge technology or its sleek design. And with the Chinese government support for the EV industry and increasing demand for green transportation, NIO is well positioned to take a lot of the market share. Furthermore, while the global chip shortage has caused disruptions across the entire industry, NIO has been very smart and keen to finding solutions that make sure that they minimize the impact towards their business. With its strong supply chain management and agile approach, based on its current performance, the company seems well equipped to navigate the challenges posed in the short term and come out well ahead of the race. Apart from that, its market segmentation sets it apart from competitors as well. While everyone's caught up in things like a price war, NIO makes it clear that they're a premium brand with a strong brand image. So the company's clearly not partaking in this race to the bottom ideology of price wars at the moment, but their sub-brand may follow the market in that case and not really cater to customers who are less sensitive to price. In short, NIO's profitability is a thrilling tale full of twist and turn. The company's innovative approach to transportation and increasing deliveries make it exciting. Expanding in the European market is a significant development that could have a positive impact on profitability as well. In September 2021, NIO announced plans to enter the European market, starting with Norway and having its premium SUVs over there. And it indeed entered the Norwegian market. The company's first European store was opened in Oslo in September 2021, and its first deliveries of its flagship model, the ES8, began in December 2021. As for its performance, according to its Q4 2022 report, the company delivered 872 vehicles in Norway in that quarter alone. The ES8 has been well received in Norway, with its spacious interior, impressive technology, and superior range, making it a no-brainer for many customers. By the end of this year, NIO plans to have 120 swap stations in Europe alone. They want to provide a robust charging infrastructure to their customers. By 2025, NIO plans to have over 4,000 swap stations globally, with over 1,000 overseas. It's important to note that the battery swap idea was actually also passed up on by Tesla in 2015. However, NIO adopted this mechanism, fine-tuned it, and continued to invest into the technology, and they're number one when it comes to battery swapping, which is selected by China as one of the preferred methods of refueling your electric vehicle. All the investments made into battery swapping have contributed to the rising losses that we're seeing with NIO due to a rise in spending. As we wrap up, in my opinion, NIO's future profitability seems promising with all the things that we have here on the horizon. With its innovative technology and commitment to providing a seamless EV ownership experience, NIO is positioning themselves well today to continue to grow in this rapidly growing EV market. So however it plays out, this journey is going to be interesting, watching NIO strive for profitability and strive to make themselves really a household name globally. That's going to be it for this video. I want to know what you guys think about NIO. Do you guys think that they are on their way to profitability, or do you think that they're burning too much cash and they're falling behind in the EV race and it just doesn't make any more sense to even bother with a company like this? Make sure you hit the like button, make sure you hit the subscribe button. Those two things do really go a long way in helping out the channel. And of course, leave me a comment down below. I always want to know what you guys think, and I try to respond to every single comment. Thank you.